Hello everybody, welcome back to Laptop Trader Channel on YouTube. My name is Philip and I'll be hosting this presentation. I am simply here to share my trading experiences and give back to the stock trading community one video at a time. This channel is mainly for new traders or new investors, but all are welcome. My goal is to educate you and get you up to speed and to keep you from losing money in trading and help you to understand the markets. We publish a monthly video and I show you guys how to create confidence by putting the odds in your favor. So good luck. If you wish to be updated when new videos are published, hit subscribe now. My email contact is laptoptraderphil@gmail.com if you have any questions. This video is for information purposes only and should not be considered investing advice. Caution, trade at your own risk. Most stock day traders lose money. Please protect yourself at all times, and I really mean that. Any stock suggestions are up to you to decide if that is appropriate for you. Good luck and God bless. So let's get to it. Start now by educating yourself on how markets work and finding out what is right for you. Invest in yourself and then invest in the markets, just like any other profession. Okay, so March's agenda. I'm going to talk about news-driven markets and the current potential new war zone or war situation with Iran. I think that is going to be or could be a possible catalyst to drive markets one way or the other. We are still in a major market consolidation, or what's called a pullback through time. We'll go quickly over a quick market review since last month. I will do a quick sector review from last month and what's moving up, what's moving down, and what's not moving. And a couple topics for the month. Okay, what to do when your stock or investment is trending in the right direction. How to hold on for larger gains using the charts. Okay, how are you guys going to manage a trade when it is working? Right, we need to think about that before we ever get into the trade. What are we going to do to manage a winning position? And then a few chart patterns to study as a stock or a market probably going higher. Looking for a high probability setups, not guarantees, right? So we're looking for high probability situations in our favor. We still need to protect ourselves at all times with position size and share sizing based on our account size and what are we comfortable with, okay? Now, before I get to that topic, I want to go and do a quick market and sector review. So we're going to go to some live charts, then we'll come back to the presentation, okay? So I'm just going to go to my watch list, my major market ETF list. I'm going to go to some charts. And these should be monthly charts. Okay, so Bitcoin is still in a major downtrend. So if you're looking to go long Bitcoin, I would wait. Bitcoin is still selling off in a major trend. As far as our main market that we watch, the S&P 500 market has looked where we use the SPY, the ETF SPY, to as our benchmark, right? We can see over the last 5 months, closing prices are within like a percentage point over the last 5 months. So just a sideways correction through time. Remember, prices can correct through price where you get a sell-off, but prices can also correct through time as the market tries to, and investors try to digest any new information. And that's why I think this potential new war zone in Iran could present a catalyst for things to go up or down. We just don't know until that happens. So being a technical trader and looking at technical charts is often a reactionary thing that we need to pay attention around us as to what's going on so that we can react or have orders in the system to react for us. So let's get to these other markets. Let's get to the NASDAQ Qs in a slight downtrend over the same time, down a few percentage points versus our benchmark of the S&P 500. So this market has been slowly pulling back as a correction through price and time. So that's where we're at since last month. So in February, we are actually down 2.3%. Okay. The equally weighted NASDAQ is doing just a little bit better, actually positive, just slightly positive since last month. So that's because the Qs measure the NASDAQ 100 or the top 100 companies in that index. And the equally weighted Qs is more of a, it's not weighted like the regular index is. So it kind of smooths things out, but very, very similar. IWM, the Russell 2000, still in a major uptrend. Up last month over 5%, slightly higher this month, 0.68%. So still in a major uptrend on the small cap stocks there. Dow Jones Diamonds, still in a major uptrend, up slightly for February, up 0.13%. So still in a major uptrend. So we want to give the benefit of the doubt when stocks or markets are on uptrends. We give them the benefit of the doubt. Transports, IWeight as measured by the IYT ETF, in a slight uptrend and now breaking out to new highs in February. So that's good for I think good for the economy. The transport average is doing pretty good, up, clearly outperforming the rest, up 6.8% in February. That's something I did not foresee, but that is what's happened. So that's where we're at. Transport's very bullish. VIX, volatility index, slightly up since last month. Again, this is a reactionary index, in my opinion. I would not be surprised this week if, with the potential war, if markets turn down, this VIX would most certainly spike up, causing more volatility. And sometimes that kind of feeds on itself. Then we have a mid-cap ETF I watch. New highs, still in an uptrend. I watch a small cap ETF. Again, still in an uptrend, new highs. So those are all pretty bullish overall. Again, I think we're still in a mixed market between, where you've got Bitcoin going down, you've got the SPY kind of stagnant over a 5-month period, correcting through time. You got the Qs, slight downtrend, and then you got these other three that are doing really well. So we're in a bit of a split market versus what we've seen in recent history. Okay, recent history we've seen the SPYs, Bitcoin, and the Qs in major bull markets, and these other ones not doing much at all. So let's get to our major sector ETFs, which track different sectors, okay, which is part of the overall market. Here we have the energy sector as measured by the ETF XLE. And you can see if we just put a level line across here, we can see it broke out last month in January. This ETF or this market was up over 14%, and now it's continued in February up over 9.5%. So that's very bullish for energy going forward. The financials are looking the opposite. The financials were a little bit down in January, down 2.4. Nothing to be worried about, but now, financials have been selling off in February also. So to me, if I was in a financial stock or this ETF, I would be, probably looking to get out or at least put a stop under here somewhere and say, look, if this starts to sell off even more or in a larger way, I don't want to be part of that sell-off. So the financials do not look very bullish at this time. Consumer discretionary, also in kind of this holding pattern across this top, really going back and forth, but I don't like that in February it's down 3.5%. So if that continues and we get another candle with a lower high and a lower low, that's an area I would not want to be involved in. Healthcare looks very good. In a sideways consolidation forever. Looked good in November. Looked okay in December. We're kind of consolidated here towards the top of this candle, so that's somewhat bullish. New high in January, but pulled back with the topping tail candle. But now in February, I think this is kind of confirmed that this sector and industries within healthcare, the buyers are trying to buy what they can and pushing prices higher, up 3.5% in February. So that looks very bullish for healthcare. XLK technology sector is pulling back along. Looks very similar to that Q's NASDAQ ETF. So this is closely related to technology, just as the Qs are, and this is pulling back along with that index. So caution on technology. Utilities continue to basically outperform. Up over 10% in February. That was a surprise to me. It's just related to people are using more energy, whether it's for personal use, charging electric cars, supplying data centers and AI computers with more power. This is in a bull market, so utilities very bullish. Looks like going forward. Now we have industrial sector. Nice consolidation here over time for the industrials, and then it broke out in January and continuation higher in February, up over 7% in February. So that's very bullish for industrial sector and the companies within that. Materials also basically the same picture. Long period of long base, long consolidation. Bottoming tail sideways, and then you just get this kind of igniting move up over 8% in January, now up another 8% in February. So materials sector very bullish right now. Communications still in an uptrend, but sideways for the last 5 months. Not much change over 5 months in communications. Slightly down in February, 1.69%. I would say that's not a huge concern. That's just kind of a part of this pull back through time. So I would say if I was in communication stocks, for me that would be a hold, right? Or I would raise my protective stops to protect profits if I had profits there. Consumer staples also long base, long period of consolidation, even pulled back in 2025, but then reverse course. We see this green, red, green igniting bar here in January, up 7.5%. And now that continued into February with the buying pressure, pushing prices up just under 8%, 7.78%. So consumer staples bullish right now. Versus, the opposite. Consumer discretionary, not so bullish, right? So that's trying to tell you that consumers are being cautious, and Wall Street sees that and are investing in companies that are a little more stable. Things like Coke, consumer paper products, Johnson and Johnson in the healthcare space has been very bullish. Stuff like that. Okay. Real estate, XLRE, long base, period of consolidation. You can see this bottoming tail bar, which is also an interesting thing to note on a chart. We had this slight pullback where we were up in November, down in December, 3%, reverse course in January in real estate, up 2.68%. And now February, very, very bullish, up over 5.8%. So that looks pretty bullish for real estate, as long as prices can kind of continue that trend. If we get a trend out of that, that looks pretty bullish for real estate. Okay. And then I just watched this stuff. This doesn't mean much to me, but the US dollar index, I'm not an economist, but the dollar has been trending lower. Interest rates, as measured by the 13-week Treasury bills, have been, interest rates have been trending lower. And also the one to watch really is the 10-year Treasury note, TNX. that looks like interest rates are going to possibly come down more based on the fact that we closed January at 4.24, and now we've closed February at 3.96 lower. So it looks like long-term interest rates may be coming down again. And if you ever hear the news talk about basis points, so closing at 4.24 in January and now closing at 3.96 in February, we would be basically down 0.25%, or 25 of 100 basis points. That's all they're talking about. 25 basis points is 25 of 100. 100 would be 1%. So when they talk about basis points, don't let that confuse you or make you think that they're smart. They're just regurgitating stuff to make you feel not too smart, okay? But that's it for our major market reviews. And then if you want to on your own, you can look into technology, for example. I'm sorry, that's the wrong one. You can look at something like SMH, which is semiconductors. So even though technology has been stagnant or pulling back, these semiconductors continue to have moved higher over the same period. So that would be an interesting thing there. You could also look at something like KRE, regional banking, kind of in a consolidation or a base over the last year. You could also look at something like, let's see what this one is. Insurance, kind of stagnant, sideways base there, or sideways consolidation. We could look at something like even foreign countries, right? You could basically buy Brazil, the Brazil stock market, using the EWZ, which is kind of bullish, right? Pretty bullish trend there in Brazil. You could look at something like oil, or oil services, right? That's bullish. Remember I said energy looked bullish. Well, over the last 2 months, oil services have been very bullish. So this just gives you an insight into, kind of how the market is working and where you can find opportunities. How about this one? KS, electric vehicles and future mobility ETF, symbol cars, right? So we had this pattern where it's coming down, went sideways, kind of came up. It's been sideways for 5 months, and this looks like an interesting, candle that's larger than the rest. It's closing above the rest to the left, and it's up 6%, almost 6% in February. So that looks like a possible opportunity for this ETF to move up to new highs versus this area. Not all-time highs, but move into this space up here, where there's very little price resistance or very little selling resistance. And then as a reminder to our long-term investors to stay the course, right? Stick to the 40-40 plan and putting away, 10 to 15% of your income for retirement. The overall markets, as measured by the total stock market ETF from Vanguard, symbol VTI, still in a, bullish consolidating range here over the last 4 or 5 months. But, we're not making new lows. We're just kind of holding on. And so just hold the course, right? Even if the market was to sell off, as a long-term investor, I would still continue my long-term investing plans. All right, so that's it for market and sector ETF review. Let's get back to the agenda. And again, what to do? Let's look at a stock here real quick. What to do if you're? I think I cover the market. What to do? Kind of buy and hold the market. That's okay. That's not a bad strategy. But what to do if? How are you going to manage a winner? Oops, let me get to the right chart. What are you going to do to manage a winner? Okay, let's talk about if you have a winning position in a winning stock, what are you going to do? Let's take a look at something like, we can look at Gilead. That's a good one. So let's say you bought Gilead anywhere back here. Maybe you bought here. Maybe you bought somewhere up here on this breakout. Maybe you bought here on this consolidation and then it broke out. Maybe you bought here on this breakout, but now you're in a winning position. And let's say, one of my rules that I have, this is just kind of something I came up with that has helped me hold on to positions longer. So here's a few key tips. One, I like to look at the monthly chart. Okay, here's a 5-year monthly chart. It gives you the big picture, okay, of what's really going on longer term, allowing me to have confidence to hold. So we had this breakout here in January over an area, and then we have a continuation higher in February. So this one's up about 5% in February. And so I have no reason to sell, right? I'm up, I'm doing good. This longer term chart suggests prices will continue higher because there's no selling resistance on this chart. Anybody that owns the stock right now is basically in a winning position. So there's no reason to sell. So let's hold. Let's try to hold. So one rule I use is once a stock has went up more than 25% or higher, I like to insert in my platform either a 10% or a 15% trailing stop or somewhere in there, because that allows the stock to pull back naturally and then resume the uptrend. Okay, so that's one thing I like to use as a trailing stop, maybe somewhere between a 10 to a 15% trailing stop. That's one tactic that I use when I see a stock starting to trend and I'm in it. Another thing we do is not looking at the monthly chart, but we can go down to maybe like a weekly chart and see, is there an area on here that makes sense where we could put a stop at a level either at or above our entry point? And if you bought way back here, right, there's a lot of places you could put a stop. You could put it under this area right here. You could put under this area here. And if, and you just say, hey, that's the point in time or price where if it gets below that, I want to get out. Okay, so you can use levels on charts to set up some profit stops where, if you bought way back here and your stop is up here and price hits your stop, well, you've actually stopped out a profit, not a loss. So that's a good thing. And you've protected yourself from any future loss there. But that to me is what I call a free ride. You buy here, you move your stop up, and maybe at some point in time, let's say it gets stopped here, you take your profits and you locked in a win. And I call that a free ride. Anytime we can protect profits above our entry point, above break even, I call that a free ride. So we could also look, from a common sense point of view. Here was a new high. This week it pulled back 2.3%, and then this last week it pulled back another 1.6. So we're down about 4% off the high. Not a huge pullback, but let's say we get down to here, right? Let's say we put in a 10% stop. The high was 157, basically. 10% of that would be about $15. So we could come down to, somewhere around 142. Say, okay, that's a line in the sand for me. Let's say under this candle. That low of that is 133. So we just say, okay, below 133 or 134, I don't want to give back any more profits. That's another possibility to try to protect profits and stay in the game in case this turns around and resumes the uptrend. So you just have to think about these things before you ever get in the stock. What type of profit potential are you looking for, right? For me, I really like when stocks get above a 25% gain. And that really helps me to, okay, we've got the 25% gain. Let's protect that. Let's at least protect 10 or 15% of that gain and see, how far can this stock go? Because we never know. Stocks can really get quite carried away. They can go up 100% or 200%. But we want to try to hold on for that ride. Okay? All right, so that's enough of that. So at least think about what you're going to do when you get into a winning position. Now, a few chart patterns to study as the stock market probably going higher. Again, we're looking for probabilities in our trading. So let's blow that up a little bit. So here is Amazon. I just put some arrows in here and I'll just discuss why I put those arrows there. So Amazon is obviously a major stock, a major large cap company everybody knows and probably recognizes, Amazon as a company. So what do we see on the chart? So first of all, this is a daily chart, 9-month daily chart. see that, price was moving this way, sold off into earnings, and then gapped down after earnings. That's always a negative sign to me, that when a stock gaps down like that after an earnings event, that means the market didn't like something in that earnings report. What happens after that? Okay, let's just follow along. After that, price actually starts to retrace back up. Goes kind of sideways, moves up, pulls back through price. We get this weird gap out of nowhere, and then it gaps down the next day. Then we kind of come into an area right here of a base for consolidation. Out of that area, we get a gap up, and we get another gap up, gap down, gap up. So there's a lot of volatility right here in this stock around earnings events, right? We had a major gap down here on earnings. We've got another gap down on earnings, but then price gapped up and kind of started to go higher right after that. So it's kind of a mixed message that the market has given us on Amazon. Again, price moved up, gapped down, closed down, and came back here. And I would say on the chart overall, this would be one of the safer areas if I was considering Amazon, because even though it, you see all these crazy gaps like this gap down, price stopped going down here. It kind of held that level, which was in line with somewhere back here by this earnings report, and in line with this pivot, and somewhat in line with this area too. So this shows me that this is an area that, buyers were willing to support. Okay, so now what do we get? Out of this area, we get a gap up, another major, wide range candle, a quick 2-day consolidation, another gap up, another 2-day consolidation, another gap up. So try to remember this sequence of events right here. We get a move down, and then the stock or market starts gapping up. It gives you a quick consolidation, gaps up, another consolidation, gaps up again. This was a pretty good area to possibly get involved with Amazon because of that sequence of events there through price. We got some other interesting things on the chart. We've got a major wide range bar signaling lower prices, and that's what happened over the next several weeks. This to me was an interesting bar because prices moved up in a pretty strong way. And then, after this day, price opened here. It opened down here and then retraced right back to where it started the day before. This is kind of what we call like a shakeout. Those can be significant too sometimes, but in this situation, again, earnings came out and another gap down on earnings. So it just seems to be a tendency for Amazon to have some pretty wild swings around earnings, which would tell me I don't really want to own Amazon around earnings as an individual stock trader. Or, maybe I'm looking as a trader for a short opportunity after earnings, at least on a short-term basis. But overall, since this point in time in November, Amazon has been in a general uptrend since November. So that's just all I was going to show you guys on that chart. To just pay attention to the overall picture of what a stock's tendencies can be, right? It seems to be kind of wild and whippy around earnings. All right, let's take a look at something else. Again, I'm going to remind you guys to protect yourself at all times. This is Arista Networks company, a fairly well-known company, but I just took some notes here on this chart. This is just a case for position sizing and or taking profits along the way up. Okay, in one day, overnight, the stock gapped down from over $400 per share to about $100 per share. If you did not take profits or you risked too much of your account on one stock, this would have been painful to lose 75% overnight. By the way, fundamentally, the company makes money and the numbers are not too bad. So fundamentally, the company looks good, but in this 1 month, this company lost 75% of its market value. So again, use caution, use position sizing, protect yourself at all times. Okay, Celsius. So this stock was in a long-term downtrend, stage 4 to stage 1. And then now on Friday, we had a gap up. So these gaps can kind of mean a lot because this was in a downtrend. and then gaps up, goes sideways for a few days, and then gaps up again. This to me is something to pay attention to, and volume increased. So this was an interesting case. These are things you guys should be watching for on your charts, right? Stocks or markets and downtrends, and all of a sudden gapping up or gapping down. It's pretty important to pay attention to that in the big picture. How about Pet Med Express? Here, in my opinion, this gap down over here from this level was the end of this long idea for at least a month. It looked good right up here. It looked pretty good. We had a gap up. We had this kind of turn here, what I would call a 3-bar turn. Igniting bar, pulls back to a moving average. But then for whatever reason, it gapped down. And it wasn't an earnings event. It must have been something just with that company or a news item. So again, position size would have protected you, at least to some degree, in that case. So things can look good. It looked like it was pointing up, and then they didn't look so good. So again, protect yourself. Rider System. This stock was in a bit of a downtrend here on a daily chart. It gapped up again, went sideways, pulled back through price and time, gaps down, and then it holds this level again, what we would call kind of a double bottom retest of a previous area of support. Okay, then we get this gap down reversal, this big igniting bar. That's a key bar on earnings. We get an inside bar, and then we get another bar, which would be considered kind of a continuation bar or a continuation candle. Okay, so we had this nice move up after earnings, and then we had this pretty sequential, pretty even pullback. These 3 candles all look about the same size. And so that would signal to me to try to get in over this candle or this candle, and as an opportunity to go long because of that sequence of events. Here is a longer look at that same chart, only this is a monthly view and this was a daily view. Okay, so I'm kind of going inside the monthly chart to look for an opportunity there. And on the monthly chart, we can see the big picture, right? This whole sequence of events where we had this long base. This thing was basing from early 2021 until mid 2023. That's a pretty long base, right? For market participants and investors to sort things out and to decide, are we going to invest more money into this company? And the answer was yes, they did invest more money because prices started to trend higher. So we're trying to identify areas that we can get involved and take part in this uptrend so that we can profit from these moves. Okay. How about Boston Scientific? So this is an example of a stock I would not buy as prices extended up for over 7 months. And yes, it has pulled back right here through price, but the probability of a high odds trade with good risk reward is not there in my opinion, based on the chart. It may have a great business with great fundamentals, but the time to buy was back here or back here. Okay, so we're looking for advantageous high probability buy points with low risk and high reward, high potential reward. Never forget that. You're looking for high reward, low risk opportunities. Here we're looking at the transportation average ETF, symbol IYT. Okay. I just want you to think about the big picture and take into all this information within this circle. Okay. So what do we have? We start at the left of the chart. We just look here. We get the stock that's kind of this ETF that's moving down, kind of makes this nice turn up, but then it sells off again. It sells off here again. So we kind of have this downtrend in this time frame here where, it wasn't a good opportunity. And so therefore, you don't want to buy in a downtrend. You're just asking for trouble. But then we get this reversal here. We have a large wide range red candle followed by a large wide range green candle. Okay, so that's something to pay attention to. And then it starts going sideways, moves up, gaps up, to a new level. So to me, that's pretty significant. We had this downtrend, reverse course, it transitioned back this way, and now we've got this period of a weekly consolidation over about 6 to 8 weeks. So that's somewhat bullish, but definitely something to pay attention to. Okay, so that could have been a potential buy point early, right, on that gap up after this downtrend. That's significant. Then we kind of move up here, move back and forth. Then price really tightens up here, which often symbols a lower risk entry when we get some tight pricing. And then we get this kind of this 3-bar turn. We get a breakout over this area. That to me would have been probably the safest area to buy right here. And after that, because all this took place and we're watching that, it equals a high probability low risk entry. And sure enough, what happened is prices went higher in that ETF. So that's just kind of a way to look at, where do I want to get involved? I'm looking for, gaps up to new levels. I'm looking for high probability tight areas. Tight areas equal low risk. I'm looking for these buy setups, these 3-part turns, in order to buy over that area, in order to take advantage of what I'm seeing on the chart. This is again a daily view of the same ETF, showing this pullback, this reversal up, and then you get this kind of level here for about 3 days, gap up, new level, and that's significant that it's, we've just basically told the sellers that, hey, we're taking control. The buyers are taking control at this point in time in a significant way through gaps up, right? Saying that market participants are willing to pay more and more for this ETF for whatever reason, okay? Then here's another gap up, buying opportunity at a moving average. Again, you had the sequence of events where we had pullback to a moving average and then another igniting bar right here, signaling that could be also a high probability area to enter. Okay, so that's that. Hopefully you're learning something from this. Green Plains, here's a stock I currently own. Several notes on this chart where we won. This was an uptrend, pulled back, gapped up on earnings, which is always a positive event in my opinion. And then just like a negative gap or a gap down on earnings is a negative event in my opinion. But then we have this pullback after earnings. We get this red bar and then a reversal, right? A 180 reversal bar. That's a big sign after this gap up. So there's 2 clues that this should go higher, and that's what it did. It went higher after that. Then we have kind of this pullback again. Prices tighten up. We get a gap up, consolidation. Gets kind of wide and whippy here. We get this, gap up of earnings, but then it sells off after earnings. Doesn't look too good. And then we get this nice long, tight. This is about a 2-month consolidation where prices really tightened up, volume decreased, and then we get this area right here where you could buy after this consolidation on this green bar, and that led to higher prices. And here's another buy setup within this circle of interest. Okay, right there, we get the pullback, green bar reversal, and then a gap up, and it breaks out over an area of interest. And then sure enough, prices go higher after that. So that was a interesting one to get involved in. Not a major stock, but still the pattern looked pretty good. And here's a 2-year weekly chart of the same company. Again, showing this kind of back and forth where it was a little bit loose, not tight, but after a downtrend, right? So we had a downtrend, transitions to an uptrend, transitions to this base or this consolidation. On a weekly chart, we get that weekly gap up sideways, and then prices are off to a new uptrend. So looking at multiple time frame charts can really help you pick out some good opportunities for yourself. Here's a monthly chart, same company, right? You can see the downtrend, stage 4, makes a transition back up, goes sideways for about 6 months, and then starts to break out. So again, looking at longer term charts can really give you a nice perspective on some potential opportunities. This would be the reverse, right? This is where you want to be careful getting involved in a stock if it's been extended up over several months or years. That when you get a wide range bar like this, that can signal, even though it's a new high, that can signal the end of the trend. Not always, but then this red bar to me confirms that trend is over. And so this one I was stopped out under this area for a profit, and then the next 2 months it went down and down again. So you want to watch both ways, both to protect your profits, when to stay in, when to get involved, and when to get out. Here's a company called Board Drilling, symbol BORR. Again, you guys can study this on your own, but here's a big area of interest to me. Right, we have the sideways pattern. Earnings doesn't do much. It kind of goes up a little bit and then it pulls back. We get this gap up. I would say that was a significant gap up. And we have an earnings event. Not much happens. We end up pulling back through price and time. We get this reversal back up after this pullback, and then it goes sideways for just a couple days, and then it takes off, right? Very quickly takes off. And so that would have been an interesting area to get involved in. Here's another one, another interesting area after this pullback. We get a bit of a 3-bar turn at a moving average, gaps up. Right there would have been a nice area to get involved in also. I believe that's where I did get involved. But a second place you could get involved in here to the right, right here at this moving average, and you get that 3-bar turn. And then prices move higher. It's right, the uptrend resumes. So right now for me, that is a hold. I want to go over something too real quick about fundamentals. So if we look at this company, Qualys Inc., symbol QLYS, the fundamentals don't look too bad, okay? And the returns don't look great. We got a 1-year return minus 33, 3-year return minus 21%, and a 5-year return of minus 4, about 4.5%. But the fundamentals don't look too bad, even though that's happening. We've got revenue growth, high double-digit revenue growth, and high triple-digit earnings growth, okay? Yet, the stock is down 10% on this day. So sometimes the fundamentals can mislead you if you're only using fundamentals. Here's some other fundamentals on the company, right? PE ratio, 19, not too crazy. PE forward of just over 19. Return on equity, 37.65%. That's really, really good. Return on assets, almost 19%. And profit margins over 29%. So these fundamentals look great. Looks like they don't have any debt. Price divided by sales is single digits. That's okay. Price divided by cash flow, 17 times cash flows. Book value, I don't pay much attention to. But these fundamentals look pretty good. Per share information, right? Most recent earnings, they have positive earnings. Next earnings date this year on May 5th. Earnings per share over the trailing 12 months. Earnings per share growth versus the previous quarter, 5.76%. Not bad. Earnings per share growth versus the previous year, over 23%. So I would say that's good. Double-digit earnings growth, I would say, is pretty good. However, despite all those fundamentals, this stock is involved in software. And recently, software has been sold off due to what? Quantum computing and artificial intelligence. So even though that stock has pretty good fundamentals, even looking forward, the stock was still sold off. So I want to caution you guys about, if you're only using fundamentals, I would encourage you to look at some charts too. Here is a stock of a company, Exo Bionics Holdings, symbol EKSO. So we've got this, it's pretty easy to see, nice sideways trend, gap down on earnings, sideways trend, still sideways, pretty tight pricing here. Then we get in something of interest happens, right? So this was on my watch list. All of a sudden we get this gigantic volume spike, over 100 million shares, and a huge gap up. In my opinion, um, too much of a gap to buy. So, but this put the stock from my one of my watch lists onto more of a daily watch list because of what happened with price. And then it goes through this back and forth, back and forth. It leaves, you get this one day here, which was of interest, this bottoming tail candle. Even though it's red, it's kind of like a shakeout where the market operators try to shake out the weak hands. And then we get this area where price just kind of starts moving sideways again for the next 3-4 days. Then we get a gap up sideways. Right there's an area of interest. Then we get a gap down reversal, nice big green bar there. And then we get that followed by, a large green bar, a red bar, sandwich in between another green bar, and then a tight bar here, and then another gap up. So the stock is starting to gap up and move up, right? And then it pulls back. And again, we get this red bar followed by a 180 reversal. To me, that was probably one of the safest areas to get involved right here. Right in there would have been a great area to get involved. I got involved, I believe, right up here on one of these two tight days. So I had to sit through this pullback, which is okay. I'm using position size. It didn't scare me. But this gap seemingly came out of nowhere. The earnings was back here. Earnings events was back here. So this was kind of like, whoa, what's going on here, right? So again, I'm showing a nice profit in that stock based on what I saw on that chart. And another thing about that is this company, I believe, is involved in healthcare to some degree. So again, healthcare sector has been showing signs of buying pressure, right? Investors willing to pay more or pay up to get involved in the healthcare sector, right? We had this, the sell-off. We had some gaps up here. Sector went sideways. Then we had another gap up after wide range bar, goes sideways, moves up, back to a moving average, right? Price moved back to this moving average, then went up again. Then we have this pullback through price and a reversal, followed by a gap up and another gap up. Try to put this into your mind. If you can put just this into your mind, if you see a stock in an uptrend, has a strong pullback, then has a reversal bar followed by a gap, usually for a day, 2-3 days, and it gaps up again. Keep that, if you can embed that in your mind, that is a key pattern to watch because it says that buyers are coming back in because they like the stock or the sector. Okay, then you get a nice tight couple week consolidation. Again, move up after consolidation. So again, buyers are in control. So, and this is just kind of trending sideways right now, just following this price area with these moving averages. It looks like that is still pretty bullish in my opinion. How about consumer staples, right? We just want to look at the whole picture. We don't just want to take just one bar and say, oh, that's it, I'm getting involved, or oh, I'm going to sell after one bar. No, we need to take into account the whole picture. So I'm just going to take a drink. I'll let you guys look at that for a few seconds, but just think about it. What do you see on the chart? Okay, so, I've just put in some arrows here that I thought were key points in the chart. Gap down, gap down, gap down, and then we had this price kind of reverse course. We have some gap up, another gap up. We had this level here retested, which kind of matches this level to the left. Again, we have this wide range bar followed by an igniting bar. We also have a dry up in volume down here. That's kind of an indicator. But after this big move up, we went sideways for a couple weeks, and anybody that saw it could have bought this consolidation or could have bought over this area and be holding a winning position in consumer staples right now. So, or be looking inside the consumer staples sector for individual stock opportunities based on the chart. Here's one I bought this year, Scorpio Tankers, symbol STNG, based on the chart, right? We had this fairly flat, sideways, kind of following the moving average. Let me let this gap up. Okay, let's pay attention now. It then pulls back to a moving average, moves up into earnings, gets sold off shortly after earnings. Pretty big sell-off, actually. And then it transitions, right? And this pullback, major pullback, downtrend, transitions, right? With a reversal candle, a gap up, sideways for 4 days, gaps up, goes sideways, and then it's back into an uptrend. So I bought this stock, I believe, right in here. Or I added right here on this gap up. So that's what I'm involved in now based on the chart and what's going on with price. Here is a monthly chart that led me to that opportunity and is leading me to hold this opportunity because the monthly chart suggests after this big pullback and this move up sideways and then breaking out again from this area that this stock is probably worth holding on to. So I'm just going to try to manage that position based on a longer term outlook. Here's an ETF, the Defiance Quantum ETF, symbol QTUM. Again, last year, one of last year's themes was what? Quantum computing. So pay attention to market themes. Pay attention to the news. What's going on around you, right? Can you guys see on this chart maybe one or two or even three possible areas to get involved in this ETF or in that industry? I'll give you about 5 seconds. Okay, let's take a look. Next picture. Here would have been a great area to get involved in after a move up and a base or a consolidation sideways, especially after these two bottom tails and this tight range bar. Right, buy over that bar, get involved here, and it's off to the races for that industry. Okay? If you didn't get that first one, you could have got this pullback, bottoming tail, right, reversal up, buy over here somewhere. Okay? It's pretty easy to see on a chart some pretty advantageous or high probability entries. Here's the Dow Jones Industrial Average, ETF, right? So if you were to buy this ETF, you're essentially buying the Dow Jones market. Can you guys see a couple of opportunities here to get involved? Okay, here's three that I saw that could have been potential higher probability advantageous entry points based on the chart. Okay, after everything I've just discussed, can you guys see now why I would choose these entry points? Right, we had a base, we had a sell-off, we had a reversal bar, a base. This would have been a breakout above that base, even though it sold off a little bit after that. But then we had this 3-bar turn. Could have bought over that area here, and it's off to the races. If you missed all that, last year was, again, a great opportunity to get involved in the industrials. We had a 3-month sell-off, big bottoming tail candle, followed by a green candle, reversed up. So this transitioned back to an uptrend. Okay? Hopefully you guys can see and are learning what I'm trying to show you. Anyway, that's the end, guys. Thanks for visiting the Laptop Trader channel on YouTube. Remember to subscribe so you get the latest video of what is going on in the markets. Please like and share if you found this helpful to you. Good luck. See you next month. Any questions, you can direct those to laptoptraderphil@gmail.com. And we'll see you next month. Bye.